This is London with MarketHedge. Let's pay attention to Bitcoin descending wedge on the map. Typically a bullish pattern. We would expect these patterns to go to the upside. We'll talk about some downside potential with a rebound to the apex of the descending wedge, a classic move that we love to take advantage of here on MarketHedge. This is London, former hedge fund owner, private, non-SEC, not financial advice. I want to go ahead and stack into some orders here. I'm going to go ahead and place in 50 orders, longs below, with $300 each in margin, 100 leverage, and $30 the increment between each order. You can see those just pop up automatically. Nice to have MarketHedge Pro, which does our laddering or scaling. Someone put it very well the other day. They said it's like dollar cost averaging in a range. I said yes, with some leverage. So congrats to everybody who's trading, i.e. Daniel. Way to trade, Daniel. Nice to see. Let's look at Daniel's trade. One of the best features of MarketHedge, pay attention, is I can click on Daniel's profile in the leaderboard and I can see where he entered into his short. Very nice in terms of this. Just incredible to be able to see how the traders are trading in real time. You're able to review trades and not blindly copy someone you don't know, but look at the technicals on a trading view chart. It's the one of a kind in terms of the first to bring this to market, the first and only to bring this feature to the market. Let's talk about why I've just entered into some longs. The reason would be on that 4-hourly chart. Let's pay attention. In terms of Friday, we've got one more day here to try and get cooking with Bitcoin to the upside or to hit the downside target. Let's go to the 4-hourly. Here we go. The 4-hourly tells the story very well. Frequently, what we're going to be looking at is this 20 moving average, the central line of the Bollinger Band. You know that we're going to be, let's say, contained quite well here recently with the lower standard deviation, right? To hit the lower standard deviation and a rebound to that 20 moving average on the 4-hourly. Then we see a repeat trying to occur here with another hit to the standard deviation to the downside, and we like that repeat hit to the 20 moving average. So this is the rationale behind my stacking orders now. What would have been a better pickup? Without a doubt, you guys know the specific right here, the specific actual standard deviation for me would have been a heavier entry, right? If I look at the overall estimated total risk, I'm looking $9,000, $10,000 on this specific spread here. If we get back to the level of support, certainly not uncomfortable in a $340,000 account. So as you guys can watch this trade play out, the understanding again here is that I'm looking for any value in this area with a rebound hit to the specific 20 moving average on the 4-hourly. That's my, I'd say, lightweight trade right now, knowing that I missed out on a heavier weight entry just due to a timing circumstance here. I have a few, if I had, more hands capable in the market would be nice, right? Busy trying to get this app out for you guys. Now, in terms of the details, let's look at the specifics on some of the dynamics in play. Are we in a bull flag? That's another good question to ask as we look at this move to the upside. The curvature for each feature here in terms of kind of a crown topping, you guys see this, kind of a crown top. We've gotten into it along with, of course, what we identified in the beginning would be this specific descending wedge. We've got a lot going on. The more that we have going on at this same time, crown top, the descending wedge, right? The potential bull flag, right? Which would be a move to the upside and then a downward sloping channel. The more that we have going on, the less I like each pattern. I'll just tell you, unless there's like a history of all those patterns, specific combination just working out brilliantly. For instance, ideally, I'd like a move to the upside and then a downward sloping channel right after this move to the upside is really uninterrupted. You guys see like a nice straight move to the upside. So these specific portions of kind of this crown top here is providing me with a little bit of hesitation in terms of just going all out gangbuster, solidly bullish. We're heading to the upside. And again, it's because these provide interruptions in a particular, straight line move we would prefer for typically a bull flag. So bit compromise, a lot going on. Yes, we still have, I'd say the primary pattern right now would be that descending wedge, which is still bullish. Remind yourselves as we look at any descending wedge of the following. While I'm targeting that 20 moving average to the upside, and guys, ready to compound in, heavyweight below, of course, in terms of the specific preceding pivot, we'd like to get to this level at the 117.8. Do note in terms of, and verifying your own charts, the apex of this specific descending wedge, this is on the 30-minute chart, the apex of the specific descending wedge is just right about in line with that preceding pivot here. So it's as if the bulls on support and the sellers on resistance are kind of targeting into this zone, which we've been talking about for days, and we just didn't hit with this recent drop. Not enough flex. Would have been a nice drop to get down, but we just didn't get it in the New York session or afterwards. So what we're going to be doing is eyeing Asia today, as Asia is up and cranking. Let's see if Asia wants to push on through and abide with, let's just say the statistics on this is a bullish move. I'll just tell you also, though, typically breakouts on this line here can be dangerous. If you trade a lot, you know that. It's not just my opinion, but breakout trades on descending wedges, unless we're just in a real bull move, guys, unless things are really, really bullish, these can hurt sometimes, because the part that can hurt is any reconfirmation at a lower line along this level of resistance. So in terms of the ideal pickup, again, let's reinforce that 119.7 to 8 was a nice drop down. If you guys are trading the alts, you're having a little bit more fun in terms of the volatility. Bitcoin kind of hanging out. At the same time, providing a nice range, and these hedges on that 4-hourly 20 moving average have been consistent. Let's see if it can give me one more hit. And I want to shout out to all our VIP. Daniel, great trade here. I've enjoyed seeing you. You got some good hands in terms of just like where you're entering in the market, ability to hold, right? And if you go negative, you've got the cash reserve in the back. You're not overexposed. It's a pleasure to watch you. J-Mac, looking forward for you to get rolling in the back. Let's see those trades be fantastic. And Luke, can't wait as well to see some of those trades start pouring through. This is London with MarketHedge. Guys, let's have a fantastic Friday and a fantastic weekend. We'll talk to you soon. Take care. Bye-bye.